Imagine waking up to the news that Elon Musk, yes, the man who's juggling rockets, brain chips, and social media empires, just dropped $1 billion of his own money to buy more Tesla stock. Not for SpaceX, not for X, but for Tesla. At $389 a share, when the stock is now at $410. That's right, the CEO who knows Tesla better than anyone just made his boldest bet yet. And you're still wondering if it's too late to get in? Leah talks here, and let's dive into some jaw dropping news that's making waves in the financial world. Let's start with the facts. On September 12th, Musk bought 2.57 million shares of Tesla, totaling $1 billion. This wasn't some automated 10b5-1 plan where the CEO's hands are tied. This was discretionary, spontaneous, voluntary, and historic. In fact, it's the largest insider buy in US corporate history by a CEO, dwarfing every other executive move. The second largest, at mere $330 million. Third, less than $50 million. The message is clear. Musk is all in. Wall Street didn't miss the signal either. Tesla stock jumped 3.56% immediately after the SEC filing, surging $425 intraday before closing at $410. That's just 18% shy of its all-time high of $488. And according to analysis like Jane Doe from Barclays, this purchase isn't just financial, it's philosophical.
Making it very clear to the market that that's what he cares most about right now.
Musk is planting his flag back at Tesla after years of distraction with Twitter, XAI, and politics. In his own words on X, he's fully back at Tesla. And he's not just talking, he's coding. Musk detailed a weekend sprint of robotic engineering on Friday night, flying overnight to Austin, reviewing Tesla's hardware 5 chips on Saturday, and holding 12-hour strategy session on Tesla AI by Monday. This isn't a part-time gig anymore, it's war room energy. Wall Street's also buzzing because this move conveniently aligns with Tesla's upcoming shareholder vote on Musk's compensation package. Remember that $56 billion pay plan that was nuked in Delaware? Well, Tesla moved its headquarters to Texas, and under Texas law, Musk and his brother can vote. That alone may tip the scales and restore the plan, which could lock Musk into Tesla for another decade. Let's not forget what happened the last time he bought Tesla shares. On Valentine's Day 2020, he dropped $10 million when shares were trading at $51. 1 year later, those shares were worth over $400, a tidy 8 times return. So the question now isn't whether Tesla will rise, it's whether you'll be watching from the sidelines again. What if Tesla's real game isn't cars at all, but teaching machines to drive better than humans, talk like humans, and eventually become the next labor force? Sounds like sci-fi. Not anymore. In Musk's playbook, full self-driving FSD and Optimus robots aren't side quests, they're the main mission. Let's start with Tesla's FSD version 14, which Musk teased as a game-changing leap.
Version 14 will be the biggest upgrade in Tesla software since version 12, are increasing parameter count by an order of magnitude.
With a 10 times increase in neural net parameters thanks to breakthrough compression algorithm, FSD 14 promises to push Tesla's driverless capabilities into a new dimension, running on the current Hardware 4 platform and potentially outperforming human drivers by 2 to 10 times in safety metrics. And guess what? The next generation chip, Hardware 5, is already on the horizon. Combined with Tesla's vertically integrated software hardware stack, it's a cocktail legacy automakers simply can't replicate. They're busy waiting for NVIDIA. Tesla's already designing its own brain. Analysts like Adam Jonas from Morgan Stanley have seen it firsthand. He drove a 2021 Model Y equipped with FSD 12.6 on a 1,400-mile road trip from New York to Michigan. 99% of the journey was hands-free. No heart-stopping moments, no panic grabs, just calm, confident automation. I can't imagine buying an EV without FSD again, he said. And that was just version 12. Imagine what 14 could do. Meanwhile, Tesla is quietly setting the stage for a robotaxi rollout across 30 to 35 US cities in the next year, with upcoming federal regulations expected to relax under the AI competition narrative. No one wants to lose to China. Robotaxis may no longer be a moonshot. They may be imminent. Now, shift gears. Musk isn't stopping at cars. The next mega push, humanoid robots. In his Master Plan Part 4, Musk declared that 80% of Tesla's future value could come from robots, not vehicles. Why? Because Tesla has 3 competitive modes that no one else in robotics does. A robot brain trained on real-world data, a human-like hand for physical manipulation, and the ability to mass-produce at scale. Tesla isn't buying parts of Alibaba and hoping they fit. They're redesigning actuators, motors, control systems from scratch. Even the robot's hands are a custom job. Musk believes once Tesla hits a production scale of 1 million units per year, the cost per robot could drop to $20,000 to $25,000.
Once you hit 1 million units per year, probably around the $20,000 range.
A price the average household can afford. He said it plainly. If successful, this would be the most important product in history. The punchline? Tesla's AI chips won't just power cars. They'll drive robots too. And with Samsung now building a chip fab in Texas under Musk's supervision, the AI 5 and AI 6 chips will be optimized from silicon to software. That's vertical integration on steroids. So while Wall Street keeps fixating on delivery numbers, Musk is quietly building an AI empire. Every time Tesla stock rises, people ask the same question. Is it too late to buy? But here's the thing. Most people don't lose money because they bought too high. They lose because they panicked too soon, way too long, and never getting at all. Just ask Gary Black. The well-known fund manager sold all his Tesla shares at $358 in May, thinking the price would drop to $240. It didn't. It climbed to $410. His strategy of sell high, buy lower backfired, not because it was irrational, but because he underestimated the nature of exponential growth and Elon Musk's playbook. This is a classic retail investor trap, timing the bottom. But in doing so, many missed the next big wave. Tesla's last 2 parabolic runs, 5 times and 14 times respectively, happened in less than 18 months. If you didn't accumulate during the sideways chop, you missed the rocket launch. Which brings us to the real strategy, long-term conviction supported by dollar cost averaging. When you stretch your investment horizon from 6 months to 5 years, your risk curve flattens and your upside multiplies. The fear of being too early vanishes, and if you've been buying regularly between $160 and $550 over the past 2 years, you're likely sitting on a position that has already doubled. Tesla's volume profile confirms this. The majority of institutional accumulation happened in that $160 to $250 range. That's not a meme, it's math. So why do people still hesitate? Because investing isn't just numbers, it's emotion. People fear buying near the top and watching it drop. But here's the irony. Most of those same people also missed buying at the bottom. They watched Tesla go from $250 to $410 and still held off for the mythical perfect entry. But investing isn't about perfect timing. It's about time in the market. And Musk knows this better than anyone. His $1 billion buy-in isn't trade. It's a message. I'm not living. He's not flipping Tesla like a meme stock. He's anchoring himself to it for the next decade, just as the company moves into its most transformative phase yet. AI, robots, vertical chip design, energy storage, all stacking like a flywheel of value. So the real question isn't should I buy Tesla now? It's will I regret not having bought any at all? Because if you think $410 is expensive, imagine how $2,000 is going to feel. Thanks for tuning in to Leah Talks. Don't forget to hit that subscribe button and share your thoughts in the comments below. Are you ready to take the plunge, or are you sitting on the sidelines? Until next time, stay curious and keep investing wisely. See you on the next one. Bye.